So this is a quick video in response to a Facebook question that I just answered. It is about lease-to-own homes. It's something I've been wanting to do for a while, but I keep putting it off. So I'm just going to do it quick and ugly, but this is the information that you need about lease-to-own homes. The program that I am a proponent of is called TRIO. Before this program, I would tell my clients to avoid lease-to-own homes like the plague. They are a trap, quite frankly. A lot of times it is something that perpetuates the rent cycle. You will never save up enough money. You can never meet all the terms in time. You end up losing with a rent-to-own home usually. So anyway, I'm going to be referring to my notes. I apologize for that, but TRIO is a lease-to-own home program that is trying to bridge the gap between renting and owning. Number one, TRIO is a HUD-approved company. That means the Department of Housing and Urban Development approves of this program. They know it's not a scam. They know that they are actually helping people. They have a proven track record. They actually have an 80% success rate. If you have ever dealt with lease-to-own homes, you know that is unheard of. 9 times out of 10, when someone does a lease-to-own home, they walk away with nothing at the end. 80% of people that use TRIO become homeowners. That's amazing. So the basic facts about TRIO. It's a 3-year lease. You can buy it early. You can exchange, extend, or move on. And that means if you are at the end of your 3 years and you no longer like that house, go pick another house. If it qualifies for TRIO, you can purchase that one instead. If at the end of the 3 years you're doing everything that you can and have paid your payments on time, you are following the contract like you're supposed to, but you need a little more time to get ready to purchase this home, you can extend it for up to 5 years. And lastly, 20% of the time this happens, you can walk away. And that means if you decide this isn't for you, if you just look back and think, you know what, I'm never gonna get it together to buy this house, I just need to move on, you walk away. That's it, you're done. That's the third option. So something else that's really important about TRIO, aside from being HUD approved, is they purchase these homes with FHA loans. That is important because FHA loans are assumable. Assumable means that if you buy the house today, or TRIO buys the house today for you, and they get a 3% interest rate, in 3 to 5 years, when you buy that home from TRIO, when you close on that contract, you can assume that 3% interest rate. Rates are super low right now. The chances of them staying this low for the next 3 to 5 years are slim. They're going to rise. That means that your affordability is going to go down. Everything is going to change when the interest rates jump just 1%. So that's huge. You can assume the interest rate. So how much does it cost? TRIO's making something to do this for you. They're not just nice people. They are. They are getting a 1% over cost. So it can be more depending on your situation. You know, every person is different. We can go through those details. If you're interested, you can call me. I'll help you with that. If it's something I don't know, we'll sit down and talk with my account representative and make sure it works for you. Anyway, so it's 1%. So that means if you find a house for $300,000 that you want to buy, at the end of the term when you purchase it, you're going to pay TRIO $303,000 for that house. So you're paying 1% more for the house. Now, you have to make on-time payments. 24 on-time payments locks that in. If you are someone that does not make your payments on time, there's a good chance your option price is going to go up. You might end up having to pay 2%, 3%, things like that. You have to make your payments on time. It's part of the contract. It's just like if you were to own a home, you would need to make those payments on time, or you would be paying late fees. You would be apt to foreclosure and other things. Equity. Let's talk about equity. Usually when you rent a house and it goes up in value, you get nothing. With this lease-to-own program, if you lock the house in at $300,000 and then in 3 years you decide you are going to buy the house and you want to close on that contract, and the price has gone up to $350,000, you get to use that $50,000 in equity as part of your down payment on the property. That's huge. You're walking into a really great situation. So the house that you've lived in, you've leased, you've taken care of, because when you lease to own, you are responsible for the maintenance on the property. You are gaining equity for all of the money you've paid, for all of the maintenance, for taking good care of that house. You are earning wealth. So that's huge. That's a big thing of homeownership, and this allows you to do it before you're technically a homeowner. Now, there are requirements for this program. The requirements are lenient, in my opinion. If you aren't quite there to make these requirements, we can help you to get there. But for now, it's a 550 minimum credit score. You need to have 24 months of positive housing. And that means in the last 24 months, you need to be able to provide proof that you have paid your rent on time, either via bank statements and from your landlord. Whoever you pay that rent to, they need to be able to show that you pay on time and you're a good tenant. You need to have a minimum of $3,600 monthly income. That is household income. So that means if you are married, your spouse, if you have a domestic partner, them as well. Whoever is going to be paying that lease payment every month, the total income needs to be $3,600. You really need to have about $4,000 in savings. There are still closing costs associated with doing a lease-to-own home. They are going to be a lot of times less than it would cost to sign a new rental agreement on a property, but you need to have $4,000. Your debt-to-income ratio needs to be under 50%, so 50% or less. And then only a third of your household income can go towards your payment. So if you meet that $3,600 minimum income, your lease payment needs to be $1,200 or less. That's to keep it affordable so that you are not in over your head. That is why Trio is so successful. They set this up so people can succeed. Now, what kind of house can you buy with Trio? You can buy a single family house. You can buy a condo. You can buy a townhouse, old or new. The house does have to pass an FHA inspection because you're getting an FHA loan on the property. It has to appraise. Obviously, that's something that it's got to show that it's worth the price you're paying. And in this market, that can be tricky because we're seeing houses sell for more than appraised value. So you're just going to have to be savvy and hire an agent that's going to work with you until you find the property that's going to work for this program. It has to be in an approved market. That goes without saying, but if it's not approved in your state, you can't do it. Trio has been approved in North Carolina since August. I've been with the company for much longer than I'm the first Trio approved agent in North Carolina, because months ago when I heard about this program, I was blown away. Affordable housing has been my platform this year. I have been on the soapbox and pushing affordable housing, and I think this is a way to open it up to so many other people. So it has to be in your state. It's not in all of the United States yet. It's slowly coming. It will be there. The thing that I may love most about Trio, besides it getting you into a home, when you work with Trio, they put you through a 24-month financial counseling. So they will work with you. They will teach you how to be responsible with your money. They will help you to work on your credit. They will help you to be successful. They want you to assume this mortgage at the end of your term. They want you to buy this house. They don't want to have to sell it to someone else. They're not trying to scam you by asking you to put a huge down payment like some lease-to-own programs do. They really want you to be successful, and they prove it by giving you a financial coach, which is an amazing benefit. So anyway, everyone's situation is going to be slightly different. It is going to be that way no matter what type of program you use, lease-to-own or mortgage. If you're interested in Trio, reach out to me. I would love to share more information. As you can tell, I am pretty excited about this program. I will take you through the assessment to see if you qualify. If you do, then we can start the application online and get you going with Trio to see if this is something that will work for you. Anyway, this is Michelle Roberts with Reignited Real Estate. with EXP. I forgot to say that at the beginning. If you have any questions, drop me a message below, send me an email. My phone number is attached. You can call or text me. And if this video was helpful, we would love it if you would give us a like and a subscribe. Thanks for watching.